You've clicked on this video, you've seen the title, and it's because you are not funded yet, but that is your goal. Your goal is to pass the prop firm challenge, get a payout, and get consistent payouts, and this video is for you. So the main reason, in my opinion, why people fail challenges is because their strategy isn't good enough to actually pass a challenge within a certain time frame. And that certain time frame I'm actually speaking about is 1 or 2 months. A strategy can be good in the grand schemes of strategies in trading. You can have a very, very good strategy. If you're making 15% per year with a relatively low drawdown, you have a very, very good strategy. Whereas the person that is passing those prop firm challenges might not have a good strategy on paper. It works on prop firms, but it might not be good in real life. And live trading on a personal account or an investor account, who knows? But that's the difference. So the trader that is backtesting their data, they're getting good returns, consistent equity graph, a decent max drawdown, you're going to be happy with the results. And if you obviously listen to me, you're also going to be happy with those results, because I preach certain realistic expectations from your trading on this channel, and I do think you guys should listen to that too. However, if your goal is to pass a prop firm challenge and you are someone that is not full-time in trading, you don't have other income sources, and you want trading to be your main income source, you cannot do that with 15% per year trading on a prop firm account. Unless, firstly, you are comfortable taking a year to pass a challenge. Secondly, you have enough capital to invest in a large prop firm account, because let's say you're trading with a 10k account to start with. If you only make 10% in a year, you're only making $1,000. Then after the profit split, after tax, after everything, you're going to be left with essentially nothing for a full year's of trading. So the best way to actually go about this is only to do that if you have the capital to invest in a larger account. And larger, I would probably say 400k minimum if you're making 10% per year for your strategy. The main reason, 400k, 10%, you're making 40k. After the splits and after taxes, fees and everything, you're probably left with an average salary. That's why I said that is the minimum. So there are obviously ways around this. The issue of getting a strategy that can pass a prop firm in a couple of months and then get consistent payouts. But there are also some very important drawbacks that you actually have to be aware of. One of the main things that I actually did when I was in the position of trying to trade with prop firms as a source of good income was increasing my risk. And when you are increasing your risk, you need to be comfortable with losing more. You have to be comfortable not just losing 1% and having then 10 chances to actually hit the overall drawdown. You have to be comfortable, let's say you're risking 3%, to only have 3 chances, 3 trades to actually win, basically. So there's going to be a higher upfront cost, or a potential upfront cost. Let's say you just pass phase 1, phase 2 and get a payout immediately. Then you are obviously going to get that refund. It is then less risky. But that first initial account, that first phase that you're going to be trading, it can be quite risky, especially if you are trading with a larger account size. And I would only recommend this to anybody who has income outside of trading, or they have a pot of capital that they are willing to invest into prop firms to potentially get payouts. If you looked on my channel previously, you'll notice that when I go full on trading with prop firms, I give myself a high risk allowance, basically. So I'm allowing myself to risk more per trade to get it done quicker. If I was trading a conservative approach and I wasn't looking to maximize my returns, but I was actually looking to minimize the downside, then I wouldn't be trading with prop firms. And the only way you can do that with prop firms is once you're already funded. Because to make 15% total from phase 1 and phase 2, and then in that same year get a decent return, consistent profits, or basically make it worthwhile as a full-time trader, you have to be making serious gains. And I feel like the only way to do this is to either trade with multiple strategies, create a strategy surrounded by higher risk, prop firm side of it too. You just increase the risk on your normal strategy. I feel like those are the only 3 ways to actually do that. But as I've said in this video, there are for different people to obviously see which one fits you. If you are that trader that doesn't have a lot of money, you have to just accept the fact that it's going to take longer to pass a challenge. And you're not going to get to $1 million in funding immediately. You're not going to pass within a month or within a couple of weeks maybe. Some people watching would obviously want that, but it just isn't realistically going to happen because you can't afford to risk more. If you only have £1,000 to trade, for example, this is probably a good example for many people watching this video. If you only have £1,000 to invest into a trading account, your best bet is to trade that account, make £100, £200, 10, 20% profit, and then invest that into a prop firm challenge. It's obviously going to be a small one, obviously 10, 20k maybe, but then you're getting used to it. You can reinvest the profits from the prop firm into a larger one and basically scale up in that process. But it also makes it completely risk-free. At the end of it, you're still left with your £1,000. What you could do is allocate 25%, 40% of that £1,000 to a prop firm challenge, because as we know, trading with a £500 prop firm challenge gives you access to $100,000 to trade, whereas trading £1,000 personally, or even £500, you make 100% profit in a year. You're only making £500. Whereas if you're trading with $100,000 and you make 100%, you're walking away with around 90k after the profit split has been taken by the prop firm. So that's definitely something you have to consider. But if you are someone that has capital, many people watching my channel are young people, so this probably doesn't apply to you. But hypothetically saying you've got 5k, 10k in a pot to trade, I would say you can invest that into prop firm challenges, but don't do it all at once and all challenges at once. I see so many traders that have 5k to spend on challenges. They'll take 10 100k challenges at once, or 5 200k challenges, and try and pass them all at once. If that is the case, if you lose 10%, all your money's gone. Whereas if you split up to 100k this week or the next few months, and then if that doesn't go well, you can obviously reevaluate, make sure you're trading properly, make sure your plan is perfect, and then maybe take another one. But don't just rush in at once, basically. And the reason for this, if you do that 10 times, 10 different obviously trading periods, you're going to have 100% max drawdown that you're actually allowed to lose. And if you are losing 100% max drawdown, then I'm sorry to say it, but you probably shouldn't be taking a prop firm challenge. And that kind of applies to every single person in this video. If your strategy on paper is not going to pass a prop firm challenge, if you have regular drawdowns of over 10%, if you have years of only 5%, 10%, you aren't likely to be able to pass a prop firm challenge easily. You're going to have to get a good streak. You're going to have to take a while to pass, and many people just don't like that. But if you are able to accept that and see it as a possibility that it could take a while and you aren't looking to rush the process, then you can definitely pass prop firm challenges. If that is you, trade a personal account alongside, build up a track record. You'll firstly get used to discipline. You can then basically prove yourself to investors, if that is something you're looking to do, to yourself, which obviously helps a lot, and it proves your strategy. If you have proof in your strategy and basically proof that it works in the live markets, you're going to go in with prop firms with more confidence. So you will basically be able to see, am I able to risk more based on my data? And if you are, maybe that is something you could also consider. And if you are looking to see how I pass prop firm challenges, there's a link to my mentorship channel in the description down below, so go and check that out too. And I'll catch you guys next time.